your tied-up capital. Eliminate costly middlemen. Access to liquidity with reduced risk. Capitalize the true value of your assets. Portfolio and investor management made simple. Real-time risk profiling and robust security. Commercial real estate investment revolutionized using secure blockchain technology. Tokenize with us today, making the exclusive inclusive.
Have you ever wondered why Tezos makes perfect blockchain network for security tokens? Well, to find out, catch Draper Goren Holm's founding partner and Security Token Summit organizer, Alon Goren, chat all things Tezos with Dave Hendricks of Vertalo, Lawlor of TQtezos, and Kevin Mehrabi of Tezos Stable Technologies, and Bilal Alamy of Equisafe.
All right. Hey, everyone. Thank you for everyone who's watching. Thank you to all the panelists that are here. It's been an exciting day. Very, very happy to be on with all of you. And we're going to be talking about Tezos. We're going to learn a little bit about the Tezos blockchain and why it might be one of the best options for security tokens. Learn, a little bit of background, but again, thanks everyone who's been online all day. I know there's still hundreds of people who are live on securitytokensummit.com. If you're watching on one of the live streams, go to securitytokensummit.com so you could join the conversation live. Welcome everyone. Thanks for being here. I think we should start with a quick introduction to each of the panelists. I'll go around about clockwise. Let's start with Dave Hendricks.
Hey, Alon, great to see you. Thanks for having me on, and great to be on this panel with a couple of fellow travelers. I'm Dave Hendricks. I'm the CEO and co-founder of Vertalo. We're a digital transfer agent that connects and enables the digital asset ecosystem, and we can get into what that means later on, after we hear from Bilal.
Hi guys, thank you Alan for having me. It's a pleasure to share the stage with you guys. So I'm Bilal, co-founder of Equisafe. We're a French-based company with the purpose of simplifying investor management to provide more liquidity to private securities. We've been in space for 2 years now and developing on the Tezos ecosystem.
Very cool. Chris. Chris, can you hear me? You were a little, actually I did say clockwise, so why don't we go to Kevin first and then hopefully Chris will, I know he has some connection problems.
So my name is Kevin Mehrabi. I've been in the Tezos space for a few years now, and I'm the founder of Tezos Stable Technologies, also known as Stable Tech, which is a consortium of many companies in the Tezos ecosystem. We build Tezos DeFi layer 1 stuff. So USDTez, the first stablecoin on Tezos, ETHTez, the first wrapped ETH coin on Tezos, and Tezex, which is the Tezos exchange. It's a non-custodial, permissionless, decentralized exchange that just launched recently, enabling cross-chain swaps and token-to-token swaps very soon. Pretty soon we'll be launching TezFin, which is like Compound or Aave for Tezos. So a decentralized lending system that'll complete the DeFi cycle.
Very cool. And Chris, oh, we lost you for a second. So Chris was having connection issues before we got on. So we're hoping he would figure it out. Oh, it looks like he's back. Chris, did you get the connection? All right.
Hey, can you guys hear me?
Yes.
All right, we're doing intros?
Yes.
I'm one of the co-founders of TQtezos. We're a team that works in the Tezos ecosystem on a number of things. Most relevantly for this, we build a lot of open source tools and work with partners who want to build on Tezos, including those who are looking at anything in the digital security space.
Awesome. All right, guys. So as everyone watching can see, we have a very well-rounded crew of individuals here building and working with Tezos in various capacities. I guess the first main question, because for people not familiar with Tezos, I'd like to actually point it towards Chris first, if your connection will allow, to ask you sort of, give us a high level coming from TQ, what makes Tezos different from other chains, and then next we'll go specifically into security tokens. I think we lost Chris again. So, oh, Chris, I think you're back. So what I was asking is, what makes Tezos different from other chains? Maybe not. So I'll pass that one over to Kevin. Kevin, can you give us just a really 30 seconds difference between what people are used to with other chains versus what Tezos brings to the table? You're muted.
I was trying to be a good boy there. So fundamentally, I think the greatest advantage, which leads to all the other advantages, is that Tezos has something called on-chain governance, which allows for a democratic parliamentary process within the protocol itself to upgrade the very protocol on which everything rests. And in that way, we stay united as a community. Anyone who has any validator who has a pitch for something to upgrade the protocol, they can do it all within the blockchain. And that keeps us from hard forking. It keeps the community from splitting, people taking off and doing their own blockchain, which we've seen splits like Cardano, Ethereum, and all of that. We could argue that Ethereum would be way more advanced today if Cardano and that whole crew hadn't broken off. And that provides institutions and in finance a lot of certainty and continuity. Certainty in continuity that things will stay united, things will go together. If you're going to put billions or trillions of dollars of assets on top of a protocol, you want to be pretty sure that that protocol is going to stay united. Aside from that, formal verification, the language in which it's built, OCaml, I mean, these are things that are really great for anything including sensitive numbers. When you want to be sure of a number down to a very precise level, Tezos is the way to go. And I can't think of any use case better for that than DeFi or security token offerings.
So that's where I'll get to the first security token focus question, right? So Kevin gave a very high level, a few differences about Tezos. Why don't we go first to Dave, because we got some specific questions for Bilal about this. Dave, why Tezos? I know that you guys have built sort of a platform agnostic product, but Tezos was one of the first blockchains that you guys integrated into it.
Yeah, we started with Ethereum, like a lot of folks did. If you took a look at the folks who have been in this for the last 3 or so years, which is about how long this industry has really been around. Everyone started out with Ethereum because it was the dominant smart contracts chain, and there was most of the initial engineering expertise was in Ethereum, and some of the other projects hadn't either done a mainnet release or they hadn't really developed a community. Tezos was the second chain that we integrated. And it was a really easy decision to do so. One of the things that's most important about building technology is making sure that there is a community of engineers and supporters that is not only keeping up with the existing technology base, but advancing it in context with what's happening, with users and with industry. And we decided to add Tezos to our supported chains in the fall of 2019, and it was a great decision. It's not easy to be a multi-chain digital asset issuer, but it's a very good idea to future-proof. And we made the decision, one, because the Tezos community is outstanding, and also Chris is not here, and Chris is part of TQtezos, but the Tezos Foundation is extremely well capitalized. At the same time, is also extremely decentralized. The war chest that the Tezos Foundation has to support the independent and decentralized development of Tezos is probably greater than I think it's certainly greater than consensus is in terms of a war chest. And what it does is it allows for rapid development in the community. And that's kind of something that we want to be part of. Certainly there are other protocols that have communities, but most of them don't have $2 billion that they are using to seed and support the development of infrastructure. And when you're trying to modernize private capital markets, you cannot do it on a shoestring. So that's I think a big advantage to developing on Tezos. You know that there is there's a foundation that's in it for the long haul. It's not an exit scam, and that just I'm not sure if those words have been used yet here. And security tokens aren't usually exit scams. They're usually entrance scams at the worst.
Yeah, well, going into from that feel like from that statement actually to security tokens, I think you're absolutely right. I mean, I think that talking about some of the things that were talked about earlier in the day, with why certain financial institutions have felt it necessary to create their own blockchains or their own sort of intranet versions of these products. A lot of it has to do with that, with the other public chains and things like that. Actually, before I go into this, actually, I want to ask this question next. Bilal, from your perspective, you guys are selling investment opportunities to investors, and you've chosen to build on Tezos. Does it matter to the end consumer, to the investor in the deal, that it's built on Tezos versus another chain? How do you guys market that fact, or is it just for you guys a decision based on product?
It's definitely a decision made on product. Just like Dave was saying, everybody started on Ethereum. And basically, when we've done the first deal that we've called Anna in the summer of 2019, we've seen right away the congestion of the Ethereum network. So we've experienced the limits of the Ethereum networks, and it was in the summer of 2019. So we've immediately have been thinking about any other blockchain that could help make more efficient the product that we were building. And we've tried a couple of chains, and basically Tezos, when we get to Tezos, we've seen that it was definitely the more efficient. So it's definitely a product standpoint, because we provide the service to the issuer, and we definitely don't want to pay very high gas fees. We definitely don't want to wait an hour for this transaction to happen. Otherwise, all the clients will be calling us and say, what the hell is going on? So it's a product standpoint, it's an efficiency standpoint, and we've experienced, again, many chains, and Tezos were one of the best KPIs we've seen, and so we've decided to focus purely on Tezos. And right now, it's been like more than a year. Then the by default choice on our platform is Tezos, and we support Ethereum and Hyperledger, but everybody's going on Tezos. They actually don't care. They follow what we prescribe.
Yeah, I'd like to, if I could go off what Bilal just said. He said something very important, which is people don't care. Okay, they want to go with the thing that works. What most folks don't know what database Facebook uses to store their cat pictures.
Exactly.
It's not important to them. Mongo, Oracle, whatever, they don't really care about that sort of thing. What they would care about, though, is it costs them $200 to post a cat picture. Okay, and so Bilal understands this, because any time you have to take a master smart contract and fractionalize it on Ethereum, just creating the smart contract and then fractionalizing it, you have no idea how much that's going to cost if you're using Ethereum. Depending on when you do it, how long it's going to take, super expensive. And if you're trying to keep up with the advances in finance today, where people are used to paying no brokerage fees, no commissions, the notion that they're going to have to pay a commission to move a token somewhere, just to move something somewhere, that they're going to pay hundreds of dollars for a commission to trade something beyond what the exchange pays and gas fees, then people start caring about what database is underlying. And so if you can take that and make that decision for your clients and recommend a higher throughput and lower gas cost chain that accomplishes the same thing, that alone, besides all the other things that argue for Tezos, that alone pays for it.
Yeah. Well,
it's a user experience standpoint.
Yeah.
Yeah.
Oh, yeah, and it goes beyond just experience, right? Like, it's not, a secret that I've loved ETH and that I still love ETH and I love the technology of this whole industry. But it first really came to fruition to me when we're constantly talking about changing the world. We're constantly talking about leveling playing fields, giving access to everyone. And then with the simple notion of like NFTs and trading cards. Imagine, one day I was thinking about this, I was like, imagine being my 11-year-old self again, sitting in my friend's garage going, I want to trade this comic book card for that comic book card, or this magic card for that magic card. And one of the parents running in between us saying, stop, you can't do it until you each give me $10. Like, it would be impossible, right? You would never do it. Now imagine trying to transfer, Kevin, you built a US dollar stable coin. Imagine wanting to transfer $100, but $10 or $15 needed to be spent on gas. That's just as egregious or horrible as the systems we wanted to replace, right? Like when we first started talking about Bitcoin, we were talking about replacing Western Union, right?
Yeah, and not only that, but even just the uncertainty around the fluctuations of that gas. You can look on historical gas prices on Etherscan right now and see just block to block, it can range as much as 80% change in gas. And you have no way of knowing if that's just how it's been all day and for this week, or that's the new normal, or if you should just sit and wait a few more blocks before you make that transaction. Now, how are you going to automate something? You can't have, unless like the bot's going to just sit around and wait for several blocks over to see, okay, is this the average or is this unusual? We need a little bit more certainty than that. So Tezos can provide that certainty. Also, to add to something Dave said that I really liked, the great thing about the foundation, not just building up that war chest, but why they can be that conservative as opposed to a lot of other foundations for different protocols. They were just over the years spending money left and right just because they had to ship, they had to keep up with the Joneses, they had to keep something out there. Whereas I think we have the luxury of time in Tezos. Very few times can you see the first mover in any industry or any product actually be having that first mover advantage. It's kind of a myth. First mover is actually the curse because they pay the money to acclimate a market, do the research and developments that others eventually iterate on, acclimate the laws and policies. And then it's the next mover after that says, thanks for doing all that heavy lifting. We'll take it from here. So, that kind of reinforces the drive too.
Yeah, I think you could look at it, both ways, right? Because in certain situations, right, my next question was actually going to be talking about DeFi adoption versus security token adoption outside of Tezos and then within Tezos. But I think it's definitely the case in these more serious, more traditional, more regulated financial transactions to not move too fast, right? If you're looking at institutional adoption and wider adoption, and then things like what happened today with Fin P2P and what's sort of happening in this space would not happen, from day one. If Alamy pitched Fin P2P to institutions 3 years ago when we were all first starting to talk about security tokens, they would have asked him what the hell he was talking about. They would be so confused. And today they want to participate. Today they want interoperability and the ability to transact with each other and across platform. So bringing up DeFi versus security tokens, I want to throw my hands up like I do when I'm normally like pitching to investors or talking to people. I always throw my hands up and say, DeFi is on one side, right? I do the Israeli hand thing. So they're circumventing regulation, right? And they're going, they're building products that essentially are probably the most efficient versions of those products, but completely disregarding regulation. Hopefully they're decentralized enough to where that's safe. But they're going around regulation, trying to do certain things. And that a part of me wants that utopian world 100% across the board. But there's certain assets and certain things, and throw up this hand, that need to have regulation enforced, right? We know that there's probably not going to be anonymous ownership of real estate. There's certain levels of transaction cross-border and around the world where regulation is there, whether we agree with it or not. And the security token technology and the technology we're all building and things like what Vertalo is building and what Bilal is building with his investment bank is going to help streamline that process. It's going to make it easier for investors to participate in more deals. And it's going to make it easier for the people who want to issue those tokens, who are going to raise money online or distribute their shares online. It'll make their life easier in being able to understand and deal with regulation instead of, instead of making it more complicated, which is what we're doing offline, right? So I say this stuff because where I'd like to go is DeFi has had this explosion now. There's let's say tens of billions of dollars sort of staked on DeFi on Ethereum at this moment, and we're starting to see the beginning stages of it on Tezos. And we see what's happening with security tokens across the market. Now, where do you see adoption in DeFi versus security tokens? Let's say let's start with just offline or off of Tezos, just cross chain. Kevin, I'd like to get your opinion there. You're building DeFi products on Tezos, so
yeah, and I think it kind of it started with two schools of thought. One was the bringing traditional assets and into the tokenized world, and another looked at the tokenizing technologies and built assets up from there, which we could call governance tokens or even algo coins and all of that. But what do we call a hardback stablecoin that's backed by fiat? Somewhere in the middle. So but compliance is just as important, definitely for USD Tez. And everything else that's built. But in the reimagining, it's just kind of apples and oranges with previous, regulatory laws that are there to protect us when it comes to these traditional assets. But I do see a convergence between these two worlds and a symbiotic relationship, especially when, people might not be seeing it today, but because, they can just take, their Bitcoin, wrap it, put it on Compound, and borrow against it, take out some coin, put it in something else, sure. But what happens when, we do that too much collectively? Where is the other value coming from? We're going to hit a limit. And at that point, we're going to have to start collateralizing other assets, borrowing against those assets. So, we do that all the time in traditional finance and banking. Our houses, put up our car, put up our, whatever we have that's good. And these things are, it's great because it enables people to free up capital to build things, in the finance world that they otherwise could not, for innovation to happen, businesses to get built that otherwise would not. The lending system is just wonderful on that end, and being able to take those traditional assets and collateralizing them is fundamentally a huge part of it. In fact, even in the first piece I wrote on TezFin, which is our version of Compound, our lending system, I went right into the idea of like, okay, what if you don't have the money to borrow against? What do you do? And I used the case example of the first one of these assets on Tezos to be built from Aspen coin, from elevated returns. You could, that NFT could serve as some form of collateral, and then we can get an appraisal for that. Somebody else can put a bid on that. That we can use these technologies to put a value on a certain asset, appraise it, and then use it within the borrowing system as we do anything else.
Well, in a more efficient way, right? Because we do it now with our houses and things like that. Right. I'll jump ahead to a question I had. We don't have a ton of time, but Bilal, when we were messaging before this, you actually brought up lending protocols and lending based on security tokens. How do you feel that's going to pan out on the Tezos blockchain?
So, like Dave was saying and Kevin was saying, the community in Tezos is very strong. And we've been sharing the same standard or converging to the same standard very quickly in the difference of Ethereum. So in a technological standpoint, it's going to be very quick to but in a regulatory standpoint, it's different. DeFi is leveraging decentralization and some kind of gray area because they're using both decentralization and full crypto. And tokenization, like we are doing, is kind of trying to digitize traditional finance and improve the transaction infrastructure. So it's two different value propositions that will take time to converge because our client is traditional finance client. DeFi is a completely new market with people dealing with crypto for a couple of or more years. But it, like you were saying today, so DeFi didn't reinvent anything. Today we're already collateralizing our real estate to get loans. So it's just a matter of time before we'll be able to collateralize our security token and get loans in counterparty. So we've been working on that for the previous months, and I think we'll get there very quickly within the next 4 to 6 months. We'll see the first use cases being thrown out into the market. It's just being a matter of time, a matter of regulatory framework, which is being dealt in most of the Occidental countries. And so then it's going to be a matter of adoption from traditional actors. But we've seen with the big bull run that we've seen on Bitcoin and the other cryptocurrencies that there is a huge spike on adoptions lately, and it's just a matter of time.
So Dave, I wanted to jump to you actually. So
I want to knit these things together.
Go. You go.
If you got a question for me, I'll take that too.
You go. Do your thing.
DeFi is just debt, okay? And most people with security tokens, it's just really equity. Those things are both normal primitives, okay? And funny enough, when you bring on a collateralized object and you take out a loan against it, if for some reason that your ratios get out of whack, then there's an automated liquidation of that asset. And what the DeFi markets haven't come to grips with yet is that a liquidation of a loan or a debt like this often creates a security because there's a secured interest. And so the markets for DeFi and the markets for so-called security tokens or programmable assets or digital assets are naturally going to converge. The people that want to borrow are going to be in the same place where people want to raise, okay, and who want to get liquidity. So they're not really, they're not apples and oranges. They're really going to kind of end up at the same place. So
yeah. So I mean, and going to Bilal's comment about the bull run and more adoption and things like that, you deal directly with issuers and folks who are looking to tokenize. Did you see an influx of inbound leads? Are you seeing a lot more people interested in this? Is it slow and steady? How do you see the growth happening? And as a secondary note on that, back to the one of the original first questions is, does Tezos matter to your issuers?
Well, Tezos definitely matters I'll go backwards. Tezos definitely matters to the issuers because they don't want to be on the hook for gas fees for either issuing the asset or for the secondary trading. But let's go to the steady drumbeat. I haven't really heard this covered today. I wasn't able to listen to everything, but I'm not sure that folks appreciate that until Q4 2020 in the United States, the so-called security token market was largely impossible to happen. Until the SEC issued its no action letter to FINRA on September 25th, 2020. and then the SEC issued their no enforcement statement on December 23rd. This market actually wasn't really even possible. And it had a lot to do with broker-dealer custody and the settlement function. So there's a lot of folks saying there's no liquidity or anything like that. I'm not even sure those folks are even participating in any of these discussions when they talk about this, because it has nothing to do with that. There's no liquidity because no one could actually bring an asset to these markets and expect them to order match and then settle and then clear. Okay, it wasn't actually possible. So if people are looking at the market cap of the so-called security token market and they're saying, oh, it's not as much as I'd like it to be, well, that's because no smart issuer would have brought something to a market that was not regulated to provide systemic liquidity. You couldn't settle a trade, and you can only settle peer-to-peer. We're not settling security token trades peer-to-peer is not a thing. Okay, we already can do that. We don't need technology to settle things peer-to-peer. That's why it takes 4 weeks to settle a real estate transaction right now, or for you to sell your options. So creating a whole market infrastructure took time. The folks at Tezos have been working on FA2 at TQtezos. There have been a lot of folks like Bilal, our team at Vertalo, some teams that were featured earlier today. They've been taking a long-term approach to creating trustful, reliable, connected architecture. Onera is doing this with interoperability. We do it with APIs. It takes a while to get here. It's not, this is a get rich slow scheme. Okay. So everyone needs to be patient. And, there's a lot, we're very busy. Let's just put it that way.
Yeah.
And finally, maybe 2021 can be the year.
Cool. So I got lucky in that we're buying a little bit of time while another panelist for the next panel refreshes. And this is, what you're bringing up brings me to sort of what brought me to this space originally, the crowdfunding space and rules and regulations moving at what feels like to me a snail's pace, but maybe to people in the traditional finance world, we've been moving really fast. But it's felt very, very slow. But what's exciting to me is one of the things that Bilal also mentioned in advance was bringing this to the masses soon and trying to unlock the ability to bring in non-accredited investors to the mix, because I think that's important to the blockchain culture and what we originally wanted to do. I still think bringing on institutions in certain larger deals and more liquid deals in the short term will help create a more liquid market before we bring in startups. But allowing everyone to participate is so important. Bilal, can you touch on that? And I know that maybe Kevin can then touch on that, of course, because he's bringing, keeping it stable with USD. You're muted.
Sorry, just very quickly on the previous topic, I would like to thank all the work of the Tezos ecosystem, and particularly Nomadic Lab, who've been fostering adoption, specifically on CBDCs, where we see French central banks choosing Tezos for their CBDC. We've seen huge corporates like the energy company EDF and insurance company becoming Tezos bakers, and on the first Euro stablecoin called LUG, issued by Société Générale SocGen. And so this is part of the facts that are fostering adoption. And we've seen, like most of the institutional and accredited investor hearing about Tezos and being happy with the choice that companies like us and Dave and Kevin have been choosing for a long time. And it's funny because they're talking about the technology where the first mover of the previous year haven't been talking about technology. They're most focusing on the improved user experience and infrastructure that have been brought with blockchain technology. And then recording on being able to access retail investor. So retail investor represent the masses. And so this is one of the factors that brings liquidity faster. And security token companies that are trying to deal with those uncertain regulatory frameworks. It's been very hard for them to address those retail investors. And so at Equisafe, for European people, we found a way of building secondary markets for retail investors and try to fostering liquidity. And this is also part of the factors and variables that will definitely fuel this the adoption of this space. So
Exciting.
yeah, that's everything.
Oh, Reg A plus. Okay.
Yeah.
Go ahead,
Reg.
Dave just says Reg A plus and drops the mic. Yeah, so Reg A plus, for people that don't know, is the ability to essentially crowdfund. Actually, in the next panel, we're going to have Kinsey on. Brian as well is an expert in this. And so, you know, in the next panel, they'll talk about Reg A plus, hopefully. Well, now I hope they will. It's basically the crowdfund rules and laws that'll make it easier for people, startups and companies to raise money online from non-accredited investors. And it removes some of the limits of going public that you might have. Kevin, real quick, we actually have to hop off. We've been really, really long, but I want you to just mention maybe some of the things on the Tezos network that make it unique from the adoption standpoint and the global sort of borderless standpoint. I know we have such an incredible community on Tezos around the world, and you're a big part of that. Right, yeah, and also, and just to, I think, leveraging the last two things that were said, really, these components that build up Tezos DeFi or Tezos security offerings, they're not, they're greater together than the sum of their parts. It's not really just about building these incremental steps and then increasing adoption. There are many situations and scenarios in which really the whole thing, you have to have a complete cycle. You have to have a complete ecosystem. So we've had assets, we've had Tez, we've had a native staking on Tez, we've had counter assets, stable coins, we have an algo coin, we have these decentralized exchanges going on, but we don't have a lending system. And with that kind of reaches a dead end in a lot of cases, because whereas you can provide liquidity and you can make a return that way, there's more incentive also when you want to do lending to go back to Compound or Aave and convert backwards, despite all of the inherent disadvantages of Ethereum right now and what has been for a long time and probably will continue in the future. But once you have that, then we'll have what DeFi on Tezos, what Ethereum was able to achieve in the last year that they didn't have before, which was a reason to bring your money in and keep your money there, as opposed to just buying an asset, holding it, waiting for some price appreciation, and then exiting. And that's why you see total value locked as a very great metric now. So you'll start to see that TVL increase on Tezos side once we get that completion, and things will escalate very, very quickly. And just also to add to what Dave said about liquidity, just look at DeFi Pulse total value locked. I mean, a year ago, we were not even like 1% of where we are now for total value locked in DeFi. And now we're all saying, oh, well, there's liquidity in DeFi. It's like, well, a year ago, they were saying the same things that they're saying about security token offerings. So this world changes very, very quickly. That's the point. And if you're not seeing that, you're not seeing why these jumps happen so quickly, not just the escalation, but just rapid escalation, you're not paying enough attention to see. So I think there's a great advantage to watching and getting involved early, not even just as an entrepreneur, but as a participant, because it's going to be a very interesting ride for the rest of 2021. It's really exciting. So with that, I want to just thank everyone who's watching, and of course, Dave, Bilal, and Kevin for being here. Links to all of their websites on our site. So please check them all out, and have a great and excellent rest of the day, everyone.
Thank you, Alon. It was great to share the stage with you guys.